Let's start by knowing about Byju. For few of us maybe not aware of what Byju do. As we know, Byju is an edtech company. Um, Basically, it provides all the online um, uh, digital learning solutions around courses and all the preparatory exams, tests for JEE, NEET, and the market is very big. It serves to K-12. K-12 means kindergarten to class 12 students. The market is big and doing very good. We all know the name. It go by Think and Learn Private Limited. The legal name of the company is Think and Learn. The brand is Byju, named after the founder Byju Ravindran and uh, her wife Divya Gokulnath. Now, if you see the right side, there is round 22, which says that Byju has raised till now round 22 of funding, which is a very big number because hardly any private limited company goes for 3 round, 4 round, 5 round, or maybe 7, 8 rounds. But we all can see that Byju has gone till round 22 and currently, not currently, 2 years back, it has made all the global news considered as world's biggest edtech companies in new age. Okay. Now, if you see the screen, this is the report card of Byju, and the numbers are little off for us because if you see from financial year 19 to 20 to 21, the revenue has gone from 1300 CR, figures are in crores, 1300 CR to 2300 CR to 2200 CR. So in 20 and in 21, the revenue has not jumped or increased very well. But the consolidated loss, if you see from 262 CR to 4588 CR, yes, this is the loss figure, and the revenue is only 2200 crores. So the loss is very huge. We'll know why this loss has happened. This sheet is about all the financial year's data. This is a more detailed set. I'll talk about what has been the reason for all these losses in the next slide. Let's go to the next slide. Uh, so companies revenue is growing good. EdTech industry is good. We are on in this online world where we are getting a lot of online YouTube learning courses, consumptions. Everything is going good. Then why Byju is has been so much into losses and trouble? So let's figure out one by one. One, because of sales strategy. We all know the aggressive sales strategy that Byju has made. If you can see the screen, on the right side, I have put a table explaining the breakup of their advertisement expenses as well as the other expenses. But if you see the number, in FY21, the total advertisement expense only on business promotion is 2250 CR. And if you remember, 2 slides back, I showed the revenue was 2200 CR. So almost for 1 rupee, they've spent a rupee to just get that 1 rupee. So it doesn't make much sense. They have put a lot of money, loads of money into this marketing expense. And second is we already know this their sales army, their unethical practices where they somehow try to manipulate the parents to go and buy these courses. Even if they don't have the money, they'll somehow partnered with all those lending apps or lending institutions and go for okay, you go for you want to buy this course, take loan, you don't have money, and somehow they are building this business. So the top line is increasing because of this, but of course at what cost? Other than this, the reasons are also regarding the accounting malpractices and the acquisitions they have made. On accounting, we all know about the case that has happened where they have tried to inflate the revenue. Anybody knowing about this, how they inflated the revenue? Okay, maybe I'll explain. So what have they have done is when any parent or any kid is buying any course for let's say 2 years or 3 years, and they are paying all the money in any particular year, what Byju was doing, Byju was booking all the revenue in that financial year only, instead of deferring the revenue for the next years. Because of this, you will have all the revenue in 1 year only. And because of higher inflated revenue, they can easily show the increased top line, make the whole presentation lucrative for investors to put in their money, or maybe creditors or whatever, all the lenders. So this is actually not right. Why? Because we all know that businesses books accounts goes with the accrual basis of accounting and not the cash basis of accounting. So we cannot record all the revenue. So because of this, the auditor Deloitte also tried to have negotiations and had a lot of heat. So because one reason was this accounting issue. Another issue was regarding acquisitions. They have made a lot of acquisitions, but all were mostly, I would say, mostly were loss-making companies. Osmo, White Hat Junior, where they put $300 million, Topper, Epic, and Great Learning, where they also put around $700 million. And all these companies are loss-making company. One acquisitions they have done, which has done good, which was Akash Educational Institutions. Uh, okay. Next is okay, yeah. This is one of also big reason, I would say, why Byju is facing this whole loss or heat from public or government. They have taken a good amount of loan, but they are not able to pay. Tried to renegotiate the terms with the lender, but creditor didn't agree. Creditor then Byju sued against creditor, saying that creditor is not giving us fair choice or fair opinion to pay the amount. Now, because of all these, whatever reasons I have discussed, Byju has gone into all these losses. And because everything was happening and with all this chaos, adding to that, they have also filed the audited statement very late. I mean, if we talk about financial year 2020 and 2021, financial year audited and filed 18 months later, somewhere in November 22. And for 21-22, the financials has got came 2 months back, November 23. So there also they had done a delay of a year. Because of these delays, it is more concerning for investors because they have put the money, they want to know what has happened in the financial year and they are not getting their results or financials. Now, because of all this, Byju is going through a very tough time. Now, I'll come to the FEMA violations. What exactly has happened recently, which has made the news? So, in November 2023, ED Enforcement Directorate confirmed that they have sent a show cause notice to Byju. Earlier, Byju founder Byju Ravindran, he said, okay, we have not gotten any notice from Enforcement Directorate. But ED then confirmed that no, we have sent a show cause notice to Byju. And the show cause notice was about the FEMA violations, the violations of the FEMA provisions. And as per ED, they are saying that the violation amounts to 9,363 crores. The amount is very big, though this is not the fine or penalty. This is the violation amounts. I'll explain in the next slides how this figure comes. Now, what all those violations are? First violation was regarding lot of import details was not provided to the regulatory authority. Now, what they have done, they have actually sent a lot of advances to outside India, saying that we will import some kind of goods or service. They will import. They have paid advance outside India, but they have not submitted whether they have received those goods, they have received those services or not. What has happened to those advances? They have not submitted the proper details of what all imports has been made out of those advances. So now the question arises that are they really advances or were they some in some form, trying to send money outside India or doing some kind of money laundering or anything? So one question that can be raised or that has been raised where ED has asked the reason. Second is the export proceeds. So if you can see 876 export bills. Ideally, FEMA regulations says that if you have made any export out of India, within 9 months from the date of export, you have to realize that money either in INR or any freely convertible foreign exchange, foreign currency. But 876 export bills has been piled up from 2020 financial year to 2023, and those has not been realized till date. So that's again a major concern. And third is the delay documentation, where FCGPR document, FCGPR form, there is a FCGPR form. I'll talk about that. What is FCGPR form? This has not been filed. Almost 209 crore of money has been received from foreign to India. Some FDI investments has come into Byju, but they have not filed the FCGPR form for this. Also, they have also done some ODI, overseas direct investments outside India, but no APR has been filed. And the amounts is very big, 8,270 crores. So they have done ODI of this 8,000 crores amount, but no APR has been filed. Also, a lot of FDI investments has been received and they have not allotted shares till date. 807 crores of the FDI investments has been done, but they have not allotted the shares of against them. If anybody don't know about FCGPR and APR, basically FCGPR we file when we do get FDI investments and Indian entities getting FDI investments and allotting any shares or preference shares or convertible debt. Whenever they allot, they have to file all these details. Just to mention, because SEBI also has this capping limit over, it's like a kind of mandatory requirement. So FCGPR needs to be filed. The due date is 30 days from allotment of shares, but no FCGPR is filed. APR also is a very important form that we file every year on the 31st of December. We generally disclose here all the financials of JV or wholly owned subsidiary that Indian company has invested outside India. These forms has been not filed. In April month also, yeah.
FCGPR is for FDI and APR is for ODI, right? That is what I get it after you're telling.
Yes.
Right?
Yeah.
Okay. So foreign direct investment ke liye FCGPR, only once you file FCGPR, you can sort of, you take FDI, you take allotment, and FCGPR is one compliance which you need to do when you receive foreign funds.
Yes.
Correct? In terms of whatever, equity share, convertible, whatever is this thing. And APR is once you've done ODI, which is overseas direct investment from India to abroad, which you've paid, that time you need to sort of file annual performance report at the year end saying that this is how the JV has performed or WOS has performed, wholly owned subsidiary has performed and all those things, right?
Correct.
And both these through the bankers, whoever you're dealing with, correct?
Yeah.
Perfect. Thank you.
Okay. Okay. Similarly, in April also there are raids or seizures conducted by ED. But these were raids only. So more of it was kind of news right now. I mean, Byju has to reply. It's a so cause notice only. Byju has to reply in a month. But I've also added one slide which says that if we were the business consultant, financial consultant, or tax consultant, what would we advise if we'll be on the Byju side? Because somewhere they can approach us, suppose. So what should we advise? What I think, first, of course, they have to reply on the ED notices. They have to justify. And they have also tried to justify saying that because we delayed the financials, that's why FCGPR is also get delaying. So the delay of FCGPR or APR is a very technical issue, not an intentional issue, because there is no financials. How can we send any FCGPR or APR details? So they've also tried to justify them. Second is, of course, why they are not able to get this financial audited on time and release it. Those things, I think, can be streamlined in a more efficient manner so that because once you get caught or the news and everything departments know about your company, you are mostly in the radar. So maybe we can advise or we can work on that. Of course, third thing, we can already notice that the losses has been piled up so much that one good way that they can reduce these losses is to slash down or slash out all those expenses wherever possible, even if it requires little bit of layoff of employees. They are also already trying to do this for Akash. They are thinking to go for IPO because a Akash is the only profitable company in the portfolio and only profit-making companies can go for IPOs. And second, it will bring new set of funds which can be then mobilized into different group companies, which is also one way, good way.
Yeah,
Uh,
but then it's a diversion of funds. No? You're raising for Akash, then you're pumping in other companies, which is not even, in your DRHP, right? I mean, again, that's something which is not
that's
a remedy, I would say. That's again calling
okay.
for a more problem because you're exposing yourself right now. There's only VCs and PEs and all of those guys.
Right.
Now you're sort of bringing in common man retail investors to sort of get their money stuck, right? Which is not a good option, I would say.
Yeah, I agree. That would be a diversion of fund and can be eye-catchy. But if what um, out of other acquisition companies like Epic or Great Learning, if they can somehow
Mm.
replicate this
Mm.
business
No,
model
I got
somehow into this Akash and
right.
try
So you're
to
telling,
raise the
yeah,
revenue of
got it.
Akash only. Yeah,
So this is a
that could be
crown
one
jewel
way.
of
And
their, yeah, this is a
Mhm.
crown jewel of their entire portfolio, and
Mhm.
somehow either they have to either raise somehow they have to raise money via this Akash either to spin off or selling or something like that, or make other companies in line with profitability with as Akash is what you're trying to got.
Like, yes, yes. Of course, they are also trying to renegotiate the terms with lenders. This is also very important, renegotiating the terms, because higher the interest and higher the loss, these two cannot go hand in hand. They are constantly making losses, and because of losses, they don't have cash. Because of not having cash, they are not able to pay the interest. So, of course, that renegotiation of terms is also very crucial. And of course, accounting and auditing, clean accounting and auditing is what they actually need to practice. That's it, I think. Any questions, please shoot. Uh, uh, you are on mute, Nitin. You
Sorry,
are on
can I
mute.
have
Yeah,
the topic
yeah.
for you was the recent FEMA violations which were there at BYJUS, right?
Correct. The
These are the
topic was
things.
this only. Yes,
Yeah.
but
Okay.
yeah, when I researched, I thought, okay, let's go little back.
Got it. Perfect. 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 Eh, Thank you for this. I think of course, two clear things which were done wrong was one was non-deferral of revenue, which they should have not done and recognized. I mean, recognized in a deferral manner, which it is supposed to be. And I think, of course, it's like a non-compliance clearly on the FEMA part, which they didn't, this thing. I think you can now a complete background of Kanaya of BYJUS. You can go and pitch for BYJUS and get it onboarded as a client. I think everybody is ready to take it up and cater them. So and BYJUS is a Bangalore-based company or a Mumbai-based company.
Bangalore.
और क्या चाहिए फिर तो you knock on the door of the office only best है ना?
Ah,
So that is there. Yeah, but yeah, I think yeah, good presentation. Thank you. I don't have any questions as such. Just the takeaway I'll participate in.
okay. So yeah, please, guys, any question you have, shoot.
I have a question or rather discussion point. A
Yeah.
while ago, I had read that Byju's most lucrative revenue stream is actually not the courses, but the resale of those Samsung tablets that it does. Did you come across this anywhere in your research? Is this true? And if so, How does that deferral angle even come? Is it relevant? Can somebody analyze this part further?
Okay. Though I'm not aware of the exact numbers of their, segmental revenue, but what I vaguely remember is that almost 50 or 60% comes from these tablet selling, and a good 30-35% still comes from this deferral of, or these courses, selling these courses. So I think still, because of the number is big, 2000 crores of revenue,
So you're
700.
telling 1,000 crores is odd as selling of tablets, huh?
Yes.
Hmm.
Is it an edtech company or
Yeah,
electronic operator?
that was the question actually one has raised on Byju, whether you are a hardware company or a software company. You first explain. You're selling
Mm,
hardwares for 50 to 60%, but they have somehow said that okay, no, these are assets, and mostly it's about online digital, data. But yeah, I'm not aware of much.
mm.
Okay, any question? No question. Thank you, everyone.
Okay. Uh,
Okay, I think Duan has a
woke,
question.
woke up, yeah. So I think I'll just summarize the takeaway rather than going to everybody. I think uh, I think the the governance is the key for any scale, any size of the company, right?
Hmm.
By like everybody back in COVID was Byju was the poster startup of almost the entire ecosystem, right? And especially in terms of their visibility and all of those things, it was too big to to sort of even think that all this mess was going on when you see in hindsight, right? So it is the easiest way, when you are sort of talking to a client or even recommending a client, or you recommend any recommendation or advisory you're giving to a client, is it's okay to sort of grow slowly rather than, compromising on your intent and governance and all of those things. And, doing such blunders, mistakes, which will come back and, just take away all the reputation and all the things which you have built, right? I mean, this is what the takeaway should be. And you can't sort of I'm still shocked that one of the biggest 22 rounds of funding, close to 700 million, or whatever,
Close to
uh,
4
rev-
billion. $4 billion
4 billion in revenue.
funding.
And their CFO, whoever was on the, or a tax head, whoever was on the company, failed to do basic MCA, basic FEMA compliances such as FCGPR or EPR, or so that is little shocking in terms of the f- the financials. I remember Deloitte has resigned and someone else had taken over, and all that was there. But that, I understand, maybe might have been intentional to avoid such discomfort, or putting yourself in an uncomfortable zone. But playing, or not maintaining the compliance hygiene is something which sort of is for a scale of that large company is something which is shocking. Uh, so that is something, again, when you are, like I said, when you are advising any clients or anything, it's okay to sort of they say that if you say compliance is costly, try non-compliance. This looks like a solid case where if you don't comply, this is what will happen. Eventually, you land up in a position where you're not able to. At least I know a couple of startups which have the deals have fallen apart because of their hygiene of the books, right? Because of the hygiene of the compliances which has not been met, right? And term sheets were given and they were taken back and not because it would take longer to clean up the entire books, rather than taking that funds and investing it somewhere, some other opportunity, right? That's how an investor, he cannot keep his funds idle. right? Where he has another opportunity. So that's how any investor would think. So thank you, Kanaya. I think we've covered this thing. I don't have any questions. I'm sure others also don't, unless anybody wants to unmute and talk. Otherwise, we are good to go. Malika, go ahead.
Uh, I just wanted to ask that now, since you mentioned that there have been violations and malpractices, so any auditor that they appointed would have given a qualified report in their audit report, right? So, basis the audit report, they wouldn't be able to, get more fundings or raise any more money, right?
No, it totally depends the risk appetite of investors as well. Even if you do a go or do give a qualified opinion is not a very bad situation where you'll not get the funding. Maybe you will not get it in the correct terms. Okay. So maybe it's like some investors read the qualified opinion and found out, okay, your financials have some issues. So instead of giving you 1,000 crore, I'll give you 500 crores. Instead of giving you loan of 1,000 crore at 10%, I will take 12%. So considering that, the negotiations can of course always happen. But of
But
course, as you said, yeah.
yeah,
Mm.
but like audit report plus it's a loss-making company. So why would anyone get attracted to a company like that? And
No,
like,
that will open a new set of
At a
yeah.
valuation which is lucrative, investors can get attracted. If suppose today, we know it will go, the plane is crashing and the Byju's will disappear soon, if that is the vision. And if he says, okay, you know what, I'm okay to sell the entire Byju's for 50 crores. You will see, like an Apple store, there will be a line of investors who will be ready to buy it. So the valuation comes into play at such, like Kanaya mentioned, the risk appetite and the right price becomes a criteria at that point of time, even though the asset which someone is looking to invest or buy is not so great.
Uh, Maybe okay. Technically, like talk about Mama Earth. Mama Earth when get listed, it was having a PE of 1,500. So for 1 rupee, you have to invest 1,500 rupees. So that was crazy, but still people bought it. The reason is in startups, when we value, we have we keep totally different metrics. It's not the loss or the earnings. It is more about revenue, market size, growth, monopoly. So the metrics are very different compared to what we think in a very normal scenario, where we think of discounted cash flow or profits. So yeah, it differs while valuing startups.
The period that is looked at is very long. So maybe 10 years from now, they'll be able to turn around and come in the green. By the time they earn profits, they already have a very huge market share. So I think the same with Zomato and Swiggy, they weren't profitable for very, very long time, but they are playing the long game.
Same as happened in Amazon, Google, everything, yeah, all these companies has shown their hubris spirit first, and then now it somehow managed to see those clear sky. Okay, I think done.
Yeah,
Yeah.
I just want
Okay,
to
okay.
know.
Oh, Mama, there's a question.
So I
Yes.
just want
Yeah,
to
you okay?
know.
Go ahead, go ahead.
So about that FEMA violation, what happened? Like they have paid any penalties or how it's going on, or still that
Because
communication is
bec-
pending?
yeah, because ED last month in November only have sent the notice. After a notice, they have gotten enough time to reply. So I think they have not replied yet. Maybe they'll reply in a month, January only. Usually 30 days or 60 days is the time they get whenever they receive any show cause notice. Show cause notice is not about accusing any company, but it is about why not. Why not we can accuse, or why not we should go for penalizing you. So it's a show cause notice only. They have not passed any order or anything as such.